Secrets, the channel for learning about trading and investing. Welcome to the daily market analysis show, Markets Tomorrow, where we look at what happened during the day in the markets and how we can plan for a better trade for the next day. Right. So we had a flat and range bound expiry today. So the markets at a very crucial resistance level, right? Breakout level, whatever we call it. So let's analyze and see where exactly we are and what we can look forward for tomorrow. So as usual, the pre-market analysis is for April 1st, tomorrow, Friday, 2022, and it's based on all the parameters that you see on the screen on the left and the right side. We'll also have some data analysis, global cues, and wrap up with some actions as well. Look at the candlestick patterns. We ended up having a small body bearish candle today. Nifty and the BANKNIFTY also closed below the previous day's high. But it was flat day, it was not bearish. It was kind of a flattest day, range bound day. If you look at long time frames, you can see that, right? Look at this 15-minute time frame view, right? So 31st March, we moved within a range. We tended to move downside, and then similar to the BANKNIFTY, we moved up and then became range bound throughout the day. So within a 100-point range, we were moving most of the day, right? But ended up closing below the previous close and then became a red candle. So the BANKNIFTY, you can say it's kind of a dodgy candle, very small body, right? And it's a small body on the Nifty also. So basically, it might have been an expiry writer's play or an expiry play that happened in the market. You never know. The sellers will try to maintain the no option return levels and all that, right? So anyway, it was a monthly expiry and it closed at flat range bound, right? Look at this, where we are. We are almost at the same place, right? And we are still, the markets are above the 100 DMA, 50 DMA, 20 DMA, and 200 DMA, which is kind of bullish. But the thing is, today it slipped slightly from the bullish zones, and then because it is range bound, it remained where it was more or less. And if on the other hand, it has got a confluence of resistances of 200 EMA, gap resistance, and Fibonacci. So all this moving average resistances 100, 200, and the 150. All three are confluencing at one place, which acts as a major resistance. And you also ended up with a candlestick using this small body. Remember, we have a breakout, a flag pattern that is seen. Here also you can see a pole and a flag pattern, which seems to have broken out, and then today it was a post day, right? So we'll get close as to how the market will be proceeding in the coming days. Whether it's going to be a failed breakout, or it's going to be a failed flag, or is it going to consolidate at this level, or is it going to move slowly upside or not, we'll come to, right? But today was kind of flat. So that's what we talked about, and intraday also we get seen in point range bound and Bollinger Bands. If you see, it's clearly the upside expansion is happening on the Nifty, and slightly it has started on the BANKNIFTY also. So it'll be volatile, but at the same time there is lower band is flattish, so it may be consolidating, but it'll be volatile, and some bullish bias is there because of the upper band expansion, and it's about the 20 DMA. So bullish bias is definitely there, right? But volatile consolidation, bullish bias, you can say. That's what the Bollinger Bands are indicating. Look at the support resistance levels. It's facing resistance near to 17,500 to 7,600 Fibonacci 23 level. That's the first resistance you clear, above that you have 7,800 to 7,850, and above that you have 18,000 levels. Downside, 17,354 would be the first support downside, and then 7,200, 7,300, and then 17,000 would be a major support, which is the gap loss level also. Below that, you will end up at 16,809 with Fibonacci 38 retracement levels. That's on the Nifty. And the BANKNIFTY, you can see that it's currently resistance levels 36,300 to 36,800 with Fibonacci 38. Above that, you have another resistance where there is a gap, 36,900 to 37,100, 37,000 range. And then the gap would be filled, and then you have the resistance at 37,500 Fibonacci 23 levels, and that's the major resistance outside. Downside, you have the supports at 35,600, 35,900. That's basically 36,000 nearby levels. and then 35,000 levels where the Fibonacci 50 is coming, and below that you have 34,350 to 34,750 range, and below that you have the gap support, and then that comes to near the lowest point would be 34,000 levels nearby, right? That's support and resistance on the Bank Nifty. Momentum was kind of bullish, but it slipped into sideways in the Nifty slightly, but more or less a flat day, flat moment I can say. It's on the short term, but medium term it remains sideways in the Nifty, and Bank Nifty is sideways on both indices on the medium term, but it has had a bounce up, that can be seen on the Nifty on the both indices on the medium term. Charts of which is not shown here. What is shown here is daily sideways on both indices as of now. Trend had crossed over to bullish zones, so DMI positive zones on both indices and remains to be there. But on the medium time, trend has not changed to the bullish zones. It's still in the DMI negative zones. So trend change remains what had happened yesterday. Momentum remain flat. Trend remain flat. Support nothing much has basically happened. Volatility slight cool off of few points, you can say it's at 56 still not below 20, right? 20.6 is implied volatility of Nifty, and IBP percentile is saying that 77.55. It has fallen from 78 kind of levels earlier. Still above 70, so you have to be cautious. Market fear and greed still above 20 is not good. It has to call off to 15-20 range, persistent for some days of trading has to happen in the price before you can say that the fear and greed is settled. Open interest may not be very much relevant because tomorrow you're going to have a new month expiry and new week expiry that's going to start, and the data that is seen may not be very much relevant, but for reference sake we'll mention that. So it's for expiry of April 7, 2022, 17,500. That's where the highest put and the call rating both are written. Then you have a highest put call rating that is happening in 16,500 and 18,500, which is where the support resistance can be looked at. 35,000 and 36,500 is where the next level of put and call rating that is happening in Bank Nifty. 36,000 and 37,500 is where the second level of highest put and highest call rating is happening. Put call ratio is very close to bullishness, but not at bullish. 0.81 and 84 is what you see in Nifty and Bank Nifty. And it was a short build up in the futures open interest rate of the Nifty, but Bank Nifty showing short covering, which is kind of slightly bullish. So Bank Nifty is slightly bullish as per the OI data of today's build up. Now heat map, you see not much of a green except for ITC and Hindustan Unilever. Right? So FMCG was doing good. Otherwise, all sectors did not do good. FMCG did good, and auto and energy. Metals also slightly did well. Chemicals as well. Right? So overall, the giant sectors of financial services, banking, and the IT did not do well. Right? That's why market did more. Now, sectorial performance, we will come back to the index heavyweights before we look at the sector performance. So it's kind of flat or slight flat day, you can say. IT closed flat, metal closed flat, auto closed flat, pharma closed down, right? And FMCG is only stopped, only sector that realty also closed flat, right? FMCG did good 1.2% up, right? The thing is, reality and the metal is maintaining the short, is mainly the bullish movement on the short term. So stock picks can be done on metal for sure, but you have to be cautious because the market is a very crucial level. Reality also is turned bullish, but medium term is still sideways. So you may wait, or you can adventure into some long trades with tight stop losses, right? So all the other sectors, IT slipped up, like it was bullish yesterday, right? IT, metal, and pharma was bullish, but so IT and the pharma both have slipped in sideways today, and metal maintains the position, and auto and FMCG and realty overall the short term remains sideways. So metal is still shining, but there is some downside that may be seen in the charts if you see in the metal sector, right? It's probably coming back to the support from where it is broken out. Probably a failed attempt to break out. You never know, but as of now it's bullish, remains bullish. So even by when it has closed the sector had closed the flat as overall. Institutional participation data has not come for 31st, but 30th and 29th. So a little optimistic for the fact that some amount of buying is happening for the FI side. So just quickly check if the data has come in for the FIs. and the DIS institutional data. I don't see them coming yet, so we'll proceed further. Most likely there might have been some FI selling that might have happened for sure today because of the non-performance in the market, a flattish day, but not big selling might have happened. Right? Moving on to the US dollar, and some rupee strengthening has happened. Remains a sideways momentum and near consolidating near the support zone, but still above 75.5. So it's a weekend rupee remains with some strength that's shown today. USD/INR cool-off had happened, but today it's a green day, and the not USD/INR, the dollar index. The dollar index, the momentum was cooled off a little bit, and today it was green day. It had moved up, but overall the momentum is sideways and seems to be consolidating, and then had to come down after facing resistance very close to the 99.6 levels on the top side. So yeah, so overall dollar is weakening, rupee shows some strength, but still at the high levels. Look at the global indices. The US markets have climbed in the bullish zones, and yesterday was kind of an inside candle, small body. You can see it on the Dow, and kind of inside bar consolidation is what you see in the Nasdaq and the S&P 500 as well. But momentum has turned into bullish on the short term for both. Right, trend has crossed out in the short term. So overall, some good bounces happened from the support zone after it was reclaimed. Right, very good bounces happened on major indices, US market. Crude oil has cooled off. That's very good news, but still above the 100 is what its chart is saying. Momentum was down in the sideways, and range is also turned to the bearishness and the short term. So that's good thing that is cooled off after hitting the 120 kind of levels, just few days back. Gold is consolidating, and today you can see that it is firmly attempting to move further upside, green close. So gold is not ready to give up and then fall down back to the channel, and it seems to be staying where it had fallen down, where it had attempted a first breakout. So it seems to be consolidating there with sideways momentum. Actuals to Cummins India is showing that very trended move in a channel with above average volumes and a bullish was divergence that can give some upside on the swing trading perspective, and trend also is seen rising and then bullish zones. This is on the daily charts, and then so you can give a short swing trades. Right? This trending move is what you see in the price action. Another one is Raymond, which is the weekly chart is what you see here. Traders bidding in daily or the long time frames. So weekly is showing a very long 2019 kind of levels, no rounding pattern, but the trade in the moment is bullish, and trend is bullish. Price action, everything is bullish, but the only thing is you have to be entering only if this breaks out from this rounding pattern. Right? Only if you see a green close above this resistance zone that where it is about to achieve. Don't jump in the trade now. Look at the volumes, big volumes are traded, and then it's definitely going to break out. So swing trade at least to the next resistance on the top. What you see, 1153, that kind of level that can be attempted. So at that much of trade can easily come in, if that breakout happens. But enter only after we get the signal. It has got great momentum, trend, volumes, and price pattern all combined together, right? So that's Cummins and that's Raymond's for long calls. Wrap up. I have a cautious mild. Yesterday I was mild bullish. Today I am cautious mild bullish. Like I didn't like today's price action. Right? It was broken out and it was turning bullish, and then it was supposed to have moved. It did move till 550 kind of nearby levels, and then could not sustain selling pressure and came down. Right? Probably it was part of the monthly expiry play that happened, but we'll wait and watch. So cautious bullishness is what my view has come out with based on the chart patterns about resistance levels, the momentum, rising momentum, the short-term bullish trend that has come out with Bollinger Bands upside expansion that's happening in all of this. So there is bullishness definitely. So, but I am cautious. So remember that market had moved 12% the last 2 weeks, right? And it has good supports of 200, 150, all DMS. The average support is there, but only thing is there is a major, it's at a very crucial breakout kind of zones, breakout from the channel downtrend, breakout from the moving average resistances, breakout from gap, no, so it is a major zone where both indices are, but Bank Nifty definitely seems to be not catching up as much, that it has got a lot of up move to make, at least till 37,500, that kind of level. So that's a worry. If I'm sure they would have sold today also, but yesterday was little giving some hope that there was a pause in the selling, but no. So for last several months together, it was only selling, and then that remains continue to worry until we get a signal that the Fyers have turned net bias. There is not that net confirmation is not coming yet. So we are in the midst of the rising crude, and although it is cool off today, still we are above 100, and then dollar also overall, rupees weakened to a very low level, right? So the green close above 17,500 and 37,500 on the Bank Nifty, about 200 EMA is what we are looking for. Until then, we don't know. It could be straight away falling back to where it draws up from 12% down move. It may be possible. You never know. So some peace talks news war is still going on, but some peace talks and then some war talks and all this happening. So this is still there. Volatility can clearly be seen there because it's not ready to give up the 20 range level of the India VIX. So far has not turned into net bias yet. Expiry day volatility has happened, so we can ignore that statement. That was meant for yesterday. So those two factors are that we had a very good 12% recovery that happened. Right, despite in the middle of the war, we did not crash too much. Right? We had crashed and we made 15 to 16% of correction, and then beautifully recovered from that. It's a strength that you see. So, every time it tries to fall back, the buyers ready to push the market upside. So that's retail confidence and institutional confidence that is there in the markets that you can see. Now the VIX has not yet cooled off, so you may opt to stay away until then, or you could adventure into, but with hedge positions if you are carrying forward to the next day. Hedge in the sense can be calendar verticals or non-directional strategies or whatever. But it has to be risk defined, and then you should not wipe out your capital, by having naked longs, naked positions in the derivatives especially. And still you may be getting quality stock at this level. Still some of the stocks have corrected good, and then only started beginning up move. So, and if you're long investor and then has the fear that the market will fall down, hedge it with option strategies or with other alternate assets like gold, which can balance investment losses whenever the market is correcting. So these are my inputs on the next day. So cautious position is what I have for the short term, and if that helps you to frame your own trade plan and market view for the next day, if it syncs with my if it helps, not sync with my view is only my view, and but the reasoning behind that is the patterns, levels, and momentums, and trend, and Bollinger Bands, and all this that we are seeing. Reasoning that can be applied by you, and you can frame a totally different view. Also, it's possible. But if that helps you in any way, please share with maximum. Like, comment, and then share. That's what we need. We need more subscriptions to keep us motivated to keep doing this every single day. Right? Thanks for watching, and happy trading, happy learning. Bye.